Artificial intelligence euphoria, American regulation risks. Bitwise says these forces could decide the next big Bitcoin move. Bitwise leaders now point to two main bearish factors for Bitcoin in this cycle. First is a potential bubble in artificial intelligence stocks. Second is the uncertain path of United States digital asset regulation. Both could weigh heavily on crypto prices. Research head Andre Dragos argues that many artificial intelligence companies trade at valuations far above fundamentals. In his view, some growth is justified, but pure quantitative measures suggest prices are stretched. If that bubble bursts, it could trigger a wider macro shock. In that shock, investors usually flee risk. Bitcoin still trades like a high beta tech asset. Its historical correlation with technology stocks means a sharp reversal in artificial intelligence names could drag Bitcoin down with them. A fast sell-off in growth equities and chip makers would likely hit crypto liquidity and sentiment at the same time. The second major risk comes from Washington. Bitwise investment chief Matt Hougan warns that the direction of United States crypto policy remains fragile. This year, President Donald Trump signed the Genius Act, a law that sets rules for stablecoins. Lawmakers are now debating a broader market structure bill that would define how exchanges, tokens, and stablecoins are regulated. Hougan worries that progress could stall after the next midterm elections. If Republicans lose control of Congress, gains that appear pro-crypto today could be rolled back or diluted. He puts the odds of a serious reversal at around 20%. That is not his base case, but it is enough to matter for long-term investors. Prominent crypto lawyer Jake Chervinsky shares the concern. He says deep divisions in the Senate make it unlikely that major reforms will pass soon. Yield on stablecoins, conflict of interest rules, and DeFi oversight are three areas where Republicans and Democrats remain far apart. He calls this market structure debate a once-in-a-generation chance to set the rules of the game. Despite the risks, Bitwise is not turning bearish on Bitcoin itself. Hougan describes the current phase as an unpleasant bear market, but one that may already be near the bottom of a 6-month correction. In his view, there is not much room left for deep downside from here unless one of the macro or policy shocks truly hits. Bitwise still holds a long-term target of $200,000 per Bitcoin. They now admit that this target is unlikely to be reached by year-end. The team underestimated how much forced selling would follow when the price failed to hold the 100,000 level. They also misjudged how strongly investors still believe in the classic 4-year halving cycle narrative. Hougan now highlights two supportive forces that could fuel the next leg higher. The first is mainstream asset managers. A giant firm like Vanguard, which oversees roughly $11 trillion, is opening space for crypto-based funds and exchange-traded products on its platform. That gives conservative clients a simple way to gain exposure. The second is growing interest from big banks. Reports suggest that Bank of America has encouraged some institutional clients to allocate between 1% and 4% of portfolios to digital assets. Even small percentage shifts from large balance sheets can mean billions in new demand for Bitcoin and other majors. For traders, the message is nuanced. Bitwise is signaling real downside risks from an artificial intelligence bust and from messy regulation. At the same time, they see structural adoption tailwinds from traditional finance. If artificial intelligence valuations cool without a crash and lawmakers find workable compromises, Bitcoin could still grind higher into the next cycle. So what can individual investors do with this information right now? First, watch flows into artificial intelligence-themed stocks and funds. Sharp inflows and euphoric headlines often signal late stages of a trend. If you treat Bitcoin as a core holding, understand that a sudden unwind in that theme could hit your crypto stack as well. Second, track key milestones in United States policy. Hearings, draft rules, and committee votes send signals long before a law is finalized. Pay close attention to how stablecoin yields, DeFi protocols, and exchange registration are handled, because those details will shape which crypto businesses can operate onshore. Finally, remember that no single asset, narrative, or election result will define the future of Bitcoin. Adoption continues in regions regardless of Washington or Wall Street sentiment. Macro cycles pass, but disciplined risk management and steady research help you navigate both hype and fear. Okay. This has been BlockBrief. Stay informed, stay ahead.